After several years of very strong price growth, 2025 was a year of transition for Calgary real estate. For a long time, we were clearly in a seller's market. Strong demand, limited supply, and prices moving up quickly. But in 2025, conditions started to change. The market didn't crash. It didn't freeze. It shifted towards more balanced conditions. And that shift happened because of two things that changed at the same time. Supply increased and demand pressure eased slightly. That combination helped things level out. Let's talk about supply first. In 2025, Calgary saw record high housing starts, which helped improve supply across all segments of the market. Over the year, more than 40,000 new listings came onto the market. That's about 9% higher than the year before. As a result, inventory levels increased, giving buyers more choice and more breathing room. At the same time, demand pressure softened a bit. Migration levels came down from the extreme highs we saw previously, and there was more uncertainty throughout the spring market. That combination reduced the intensity we've been seeing in buyer competition. This is what allowed the resale market to move away from being heavily seller-favored and into a more balanced state. In terms of sales, 2025 ended with 22,751 units sold. That's about 16% lower than the previous year, but this part is important as those sales numbers are still in line with long-term historical trends. So while sales cooled compared to the peak years, activity remained healthy overall. This wasn't a demand collapse, it was normalization. Now let's talk prices, because this is where it gets interesting. The overall annual average benchmark price for 2025 was $577,492, which is about 2% lower than last year's annual average. But that headline number doesn't tell the full story. Different property types behave very differently. Detached homes saw prices rise about 1%, semi-detached homes rose about 3%, apartment condominiums saw prices fall about 3%, row homes declined about 2%. So why the difference? Supply growth was especially strong in the apartment and row home segments, and that additional supply put downward pressure on prices in those categories. Meanwhile, detached and semi-detached homes continue to benefit from strong underlying demand. So we're not seeing one simple market. We're seeing multiple micro markets moving at different speeds. Location also played a major role. The Northeast District recorded the largest price decline in 2025, but context matters here. That same district also experienced the strongest price growth over the previous 2 years. So part of the decline is simply a market correction after a very strong run-up combined with improved supply across the city. Again, this highlights why broad headlines don't tell the whole story. So what does all of this mean? For buyers, it means more choice, less urgency, better negotiation conditions in some segments. For sellers, it means pricing correctly matters more than ever. Strategy matters. Not every area or property type performs the same. And overall, it means Calgary has moved into a more balanced, healthier market. Not overheated, not distressed. Which location you're in is more important than watching headlines. If you found this breakdown helpful, make sure to like and subscribe. I'll continue sharing clear, data-driven updates so you can make informed decisions. Thanks for watching. I'll see you in the next one.